We're starting off. YouTube Live is active. Facebook Live is 3, 2, 1 active. Am I good in the room? You guys can see me. Whether that is a fortunate or unfortunate event, as long as all I'm asking is if I am there. I am here. I am live. Ladies and gentlemen, this is going to be the most important week of 2019. It's going to set the pace for the entire year. We have the most major companies reporting. We're going to go over a deep analysis of earnings and my thoughts, as well as a thought of a stock that could potentially pop 20% or more on earnings from where it's trading today. And this company is reporting this week. You're going to want to hear that and so much more. We're going to go through that, our game plan in Forex, as well as our full stock analysis and our precise daily stock levels. I am Mark Melnick, and this is the Newsbeat Show. Good evening, ladies and gentlemen. Welcome to the Newsbeat Show. What if there's a stock that I'm putting my money where my mouth is that I think is going to be up potentially 20% or more this week, and it's going to have a magnificent run on earnings? I could be wrong, but I am betting on it currently, and I'm going to be potentially adding more money this week on the play. You're going to want to find out what that name is. And oh my goodness, do we have the most important earnings season of the entire year, because we're starting off this week. We have Apple, we have Amazon, Facebook, those little companies that you might have heard of, Tesla, Baba, so eBay, PayPal, goodness, so much more. And we're going to go through all that and more. But first, I would like to say thank you to myself because, nothing wrong with patting yourself on the back once in a while. And T3, by watching this video, you agree to hold Mark Melnick legally harmless to anything and everything you might see, hear, wish, think, anything that I say. I will not confirm or prove anything I say. In fact, I'm not even human, potentially. You're going to have to agree to that as well. If you do not agree to hold me completely harmless for everything on this video, you must exit this video immediately. Well, man, you did so much for me by agreeing to, not sue me. Is that what America has come to? Can't even speak my mind? I have to make sure that you guys hold me harmless for everything? Let's talk about it. Let's get right into the earnings. This is what I'm gonna do. We have so many earnings analysis. I'm gonna go through Apple, Amazon, and Facebook. Then I'm gonna unveil the stock in which I think is gonna have a potential 20% up move this coming week on earnings. And we're gonna go through all of that. So we're gonna start off with, drumroll guys, Apple. We're gonna start off with Apple. Now, you guys probably remember the video I did on Apple. Came out after Tim Cook announced that they were going to be missing on numbers, and I said Tim Cook was an absolute genius. I said it was an absolute genius, and since then, the stock has retraced 100% of the losses. If you remember, when Tim Cook said the Apple's numbers were going to miss and they're focusing on innovation, yada, 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 they basically closed at 157.92 on January 2nd and then opened up at 143.93 the very next day. So Apple gapped down like $13, only to see Apple hit $158.13. So everything negative Tim Cook said on that one day has completely come back. And this was the day right over here in which I called Tim Cook a genius. Now remember, it closed at the day lows that day as well. Closed at 142.19 when I did that video. And if you remember from that video, and you could go back and watch it, watch the Newsbeat show I did on January 3rd. You'll see it. If you remember from the Newsbeat show, I was basically talking about Apple and what would happen, if the analysts were willing to lower the bar on Apple. If they were willing to lower the bar on Apple, I thought that was what was needed for a potential beat. Now, if you remember what I said on earnings, earnings is all about future projection. There's a reason why I sat there and trashed Netflix on earnings, and coincidentally, Netflix dropped after reporting earnings and kept falling. And there's a reason why, despite Apple, me saying that Apple sucked on earnings. And remember, the last time I said that was all the way back here when Apple was over $200. I said, guys, Apple earnings suck. They suck. And everyone, Melnick, he doesn't know what he's talking about. And you know what? I am wrong at times. I don't want to, I'm not here pretending that I'm always right, but when it comes to me analyzing these earnings numbers, I'm pretty damn consistent. And remember, I was the person bashing Apple, and I bash wasn't anything personal. I bashed Facebook, Apple, Amazon, Netflix, Google, and the whole market collapsed after I trashed them all on earnings because their earnings projections were lower than analyst consensus across the board, and that's why I said they were going to fall. So how about, all right, Mark, I get it. You were that dude. What do you think this time around on Apple earnings? Well, a lot of them are talking about 5G chip supply. Everything is talking about 5G right now. Coming out, Apple shipped 2.5 million fewer smartphones in China in 2018 versus 2017. People are using new phones. People are using new phones. I think the number one phone in the world is Samsung, followed by the Huawei phone, and China's listening to every message and everything you do on that phone. Wink, but not really wink. It's actually very serious. And Apple is the third leading smartphone maker out there. So, um, what I was looking for ever since Apple, um, after Tim Cook released that letter on January 2nd, what I was hoping for is that people were going to come out and start lowering their targets on Apple. And and if you watch the video, I called Apple geniuses because even though the bar is up here in general for Apple, where it should be, by Apple doing it, it allowed the analysts to lower the bar, making it easier for people to jump over. The analogy I used is you ever go see that movie? Everyone's like, you got to see this movie. It's the greatest movie. Oh my God, you're going to love it. You got to see this movie. And then you watch the movie and you're like, yeah, it's pretty good. It's pretty good. But, you come out feeling like, yeah, it was good, but, it wasn't the greatest movie you've ever seen. That's how Apple's earnings expectations are. So what Apple came out and said, yeah, this movie's not going to be so good. It's going to be average or whatever. And then you come out and you're like, wow, that movie was actually pretty good. And you're using the same words with a different sense of optimism. So what happened, where I'm getting with it, is the Apple estimates were already lowered. Analysts had to have lowered their earnings estimates ever since. And I will tell you that even though I think Apple earnings are not going to be as good as the old consensus, if the analysts were smart enough to lower price targets and lower valuations and lower their expectations of Apple, um, I think they're going to have a good chance of gapping up on earnings. I think they're going to have a good chance of gapping up on earnings. And again, I was very against Apple on their last earnings report. On their last earnings report, they cut their Q1 revenue to 84 billion from 89 to 93 billion, which has an average of 91, let's say. Well, not let's say, that's exactly what it is. So they're basically, you know, they're making 7 billion less than what was expected, off of what was expected. So when you're able to just lower your revenue outlooks and just start cutting what you're expecting, um, a lot of analysts came out and cut and lowered expectations. Then you had a lot of companies come out the next day, start downgrading Apple. Let's just leave it like this. I think the bar is lowered enough for Apple for them to jump over. I don't think these numbers are going to be good compared to what they should have been. But because of what happened in Apple and because of where it is right now, I mean, I just see a move like this in Apple. They lowered expectations. Tim Cook did the genius move for what Apple needs to gap up on earnings by lowering the bar for what Apple needs. With that being said, keep in mind when they lowered the bar, what they lose, like 400 billion, 350 billion in market cap. It's fair for them to lower the bar. The company took a chop. The company lost a lot of value. It was the largest company on the planet at one point. I believe it's now Microsoft, if I'm not mistaken. Let's go into Amazon earnings now. Amazon has held up, closer to the all-time high percentage-wise. Um, has held up closer than Apple has. And I just want to take you a little way back. And again, I bashed the earnings of every one of these companies in a positive way. Look, I support them when they were going up. I bashed them when they looked a little too lofty. And I definitely want to go over that. So let's just see real quick. 1 second. So Amazon last reported right over here on October 25th. And if you remember what happened that day, they gapped down. They gapped down. Remember, I was actually pre-earnings. I was telling everybody, including funds and everybody that I speak to dump out of their Amazon position. The earnings were going to suck, and that's why a lot of them fell in love with yours truly here. But let's go ahead and let's talk about some of the Amazon earnings and what am I really expecting this time around. So Amazon, let's see. Huh? Why can't I pull up this report? Just one moment. Hmm. Wait, hold on. What am I missing here? Amazon reported 1025 last, and that is right over. Okay, I see what I did wrong. I thought 10 was. Never mind. All right, so Amazon last time reported $5.75 versus the 314 expected. That handily beat earnings. They missed a little on revenue, but why I bashed on, again, I really don't care what these companies report for the current quarter. People look at these companies for the future. That is the bottom line for all these companies. They always look at these companies for the future. So Amazon for the future for this coming quarter said that they're doing 66.5 to 72.5 billion, which is a 69.5 billion median price versus 73, almost 74 billion consensus. And that is why I came out and said that even though Amazon Web Services are growing, and that's what every analyst was doing at the time, and shame on them. And I can't stand, there's a difference. In the game of life, I think it always pays to look for silver linings all the time. When you're an analyst and you look for silver linings, it just makes you an ass. It's like, shut up. Like, you get paid to give unfettered, unbiased information, and they're just biased based on firm positions, and the firm's paid massively. So after they decreased their revenue outlook, what happened was Amazon fell as low as $1,307 from when they were prior to the report at 1782. So they dropped almost 500 points. Let's call it 482 points. They dropped $500 for Amazon. That is huge. A $500 drop since then. And since then, the market has come up. I am not expecting much from Amazon. Let's be clear. I think Amazon earnings are going to suck. Amazon, what Jeff Bezos should have did, and should have done rather, is the same thing that Tim Cook did. He should have came out and said, guys, we're having a tough time here. We're going to miss on revenues. Come out 2 weeks earlier, like Amazon, like Apple did at the beginning of the year. Our revenues and numbers sucked, and blah 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 blah. And we're going to look for innovative ways to make money. Here's my letter to the shareholders. Walk in, you'll see Amazon gap down 150, 200 points that day, and it would have climbed up just as easily as Apple did. And not only that, there would be no surprises. So when Amazon comes out and they suck on future guidance, which I believe they will, don't be shocked. Oh, I love Amazon, Mark. I love my Amazon Prime. Me too. I love Amazon services. Me too. What does that have to do with the fact that they suck when it comes to analyst revenue projection? You tell me. You tell me. Can we just, for just one moment, cut the BS and just remove all of our feelings aside? I love Netflix. I love all the FANG name services. I'm talking to you on Facebook now, right? I'm talking to you on YouTube that's owned by Google, right? Amazon's earnings are going to suck horribly, just like they did last quarter. And I don't see anything that Amazon has done to fix that unless they're doing something behind the scenes. I would call it a surprise. And look, these companies can't surprise. If Amazon beats on, I don't even care. I don't even want to say gap up or down because I bashed Netflix 2 earnings ago and they gapped it up and then they fell, and then I bashed it last earnings. They gapped down just a little and then it fell harder. Look, Wall Street will do whatever they want with the initial gap. I could care less about these stupid analysts defending their firm's position by turning a blind eye to reality. Like, it's like, hold on, here is a load of BS. But if I go like this or I go like this, I can't really see it. And I'm just going to look at the Amazon Web Services growing. I don't want to see all the other issues they're having. Amazon's earnings are going to suck. So are Apple's earnings. But Apple is going to look good because they lowered the bar and they prepared for it. Apple is by far the smartest company when it comes to what they have done. Because Apple came out and they're like, hold your horses, everybody. Our earnings are going to suck, but this is what we're doing to fix it. So all the analysts came out and like, okay, let's lower the bar a little. Now they're going to just like, like just jog over and they're going to hop over that bar. Amazon, Jeff Bezos, maybe marital issues right now. Complete and total moron imbecile. Complete and total moron and an imbecile when it comes to managing positions for his shareholders' value. Shame on him. Shame on all the companies that didn't do what Tim Cook did. I commend Tim Cook again for what he did. All right, let's go to Facebook. Mark Zuckerberg, because he was able to, steal an idea from his Harvard classmates. He definitely could run one of the largest companies on the planet. He's great. Look how cute he is. Let's talk about Facebook's earnings. So Facebook, as you can see, has been in a to put modestly, Facebook has been in a deep slump. Last earnings, $1.76 versus $1.47 expected. 13.73 billion. Not quite the 13.78 billion expected, but I'm ignoring that. Let's whoosh, like you're swimming, you just move it aside. What they didn't say on their last earnings, and shame on them, is they actually didn't give future projections. And when companies do this, it makes my respectometer drop through the floor. It's like my respectometer for this company is at all-time lows, and I would never be an investor in Facebook long term when you have companies who are refusing to show me your future. It's like, you know what it is? It's like the gurus out there who, like myself, who like, which I don't do, but like show you just a P&L one day and show it really good, but don't show you the $50,000 they lost in between because there's no reason for you to do that. You have to create the facade as almost that like you're bulletproof and invincible. And that analogy is exactly what Mark Zuckerberg is doing with Facebook. That is exactly what Mark Zuckerberg is doing with Facebook. And the truth is, I don't know what Facebook is going to do. They could gap up massively. That wouldn't surprise me. They could gap down massively. They could go sideways. Truth is, I do not know what Facebook is going to report because Facebook intentionally and consciously refused to put out forward looking projections. And the reason why they refuse to put out forward looking projections, despite the fact that, God, I don't want to make fun of him, but despite the fact that Zuckerberg has done it in the past, he decides with his stock plummeting, it's convenient to just not talk about the future. I'll show you what happened right now, but with all the lawsuits looming overhead and in Facebook's uncertain future, I don't want to spook out shareholders by telling them the future. Believe me, if he had something really good to say, you would be the first person hearing it. You would be the first person hearing it. So the truth is, I have no idea what Facebook is going to do. Now, I wanted to go over, now I'm going to share with you my an earnings play in which I feel is going to go up 20% or more this week. And Again, I could be 100% wrong. I think a lot of times betting on earnings prior to the report is very often a coin flip. I mean, you could believe in Amazon long term. I believe in Amazon long term. I think it's a solid company. How's that? I think they have a dominant piece of the market share for where the future of the world is going. I feel the same way about Apple. I don't really feel the same way about Facebook. I don't really feel the same way about Netflix. I do feel the same way about Google. So when it comes to like Apple, Amazon, and Google, AAG, I mean, for me, those are the companies that are going to make it really well. I still have so many issues with a social media platform carrying us into the future. Do you guys remember MySpace? What happened with MySpace? Someone else did it better? I think people could do Facebook better. I think people are going to do Netflix better. I think Amazon already does Netflix better. You know why? Because Netflix charges you a certain amount a month and bleeds money. And you know what Amazon Prime does? They're like, you want to watch this show, Mark? Pay me. And I'm sitting here and I'm on the couch with my wife, just put the kids to bed, and we want to watch something that we want to watch. We don't want to deal. I'm not going to scroll through Netflix and look for some potentially garbage show because that would just completely deflate me. I'm going to watch something I want to watch. And if Amazon is going to charge me $2.99 for the HD video or $29.99 for the season, I'm going to invest $30 in the effing season. That's what I'm going to do. And that's why Amazon Prime makes money off me. That's why they make more money off me than Netflix. Think about that. Now, a lot of people, they're like, look, I'm on a shoestring budget. Netflix is what I afford. That's what I watch. God bless you. But I am telling you, for me, Amazon Prime makes more money off me than Netflix. Because I'll buy a $30 show, I'll buy another $30 show like at the season, and like they offer it to me in HD or SD, and I'm like, I'm either going to pay $20 for the season and what's SD, simple display, whatever it is, as opposed to high definition or whatever. And they tag me every time. That's why they have a better business model. Hulu has a better business model than Netflix. Netflix is being run, I lost a lot of respect for their leadership. And again, you're talking to somebody who believed in Netflix since day one. I lost a lot of respect for their leadership. With that being said, why don't we get right into the name in which I feel is going up 20% or more? Drumroll. Kemet. Kemet Corp. KEM is the symbol of the name that I think is going to gap up massively on earnings. First of all, they are reporting Thursday. I have to check up. Is it Thursday after hours or pre-market? The truth is, I forgot, so I'm going to just go ahead and look. They're reporting Thursday. KEM. They're reporting Thursday before the market opens. So if you did want to play it prior to earnings, you'd have to be in by like Wednesday night, unless you wanted to buy shares early in the morning on Thursday, which I'm going to trade this through options. So let's talk about Chemet Corp really quickly. First of all, $426 million company, and they make money. I say $426 million company like they're tiny and they have a lot of potential. All right. We're talking about, Facebook reporting this week. That's a $35.2 billion, excuse me, much larger than that. It's a $428 billion company. KEM is basically like Facebook, except actually KM, I'm sorry, KM is a $1.18 billion company. I pulled up the wrong symbol. Still microscopic compared on the scope of things. And, KM, I mean, I've been trading since 99. I remember KM over $250 back in May 2000. And the company has ran into a lot of difficulties, but they really picked up their game. Doesn't really, I mean, has 263 million in cash, 316 million in debt. To me, that is fundamentally, from a fundamental perspective, um, really bullish. I think we're going to get earnings growth from the name. Here's just again a monthly chart. I think this company is going to give us earnings growth. And if you want to know what kind of company they are, um, they operate in solid capacitors, film, electrolytic and electromagnetic sensors, actuators, and they basically they serve original equipment manufacturers, electronics manufacturing services providers, and distributors in various industries, including automotive, communications, computer-related, even military and aerospace. So the company, by the way, is old school. It was founded in 1919. Yeah, 1919. Like, it's actually kind of funny because this year is its 100th anniversary. I'm expecting really bullish things from this company. I'm going to go ahead and put a $25 target on Kemet. Again, I'm not an analyst. I currently, just for full disclosure, I have a small position, a small options position in it already that is actually up a little bit of money at the moment, but I'm planning on adding more this week just for full disclosure measures. And I'm probably going to go ahead and just buy some options either expiring in February or March. I'm just going to, that's what I'm thinking. And, I think this company can be big. I mean, technically, I could talk about what I like about it technically, but there's no reason. If these earnings are, if they suck, company will gap down, and vice versa if they're good, most likely. So KEM, $25 target. I said what, 20% move? That's about right. Off the current levels, I think you could get a 25% move in this name. A 20%, excuse me, move higher in this name. All right. I also want to talk about another company, two companies reporting this week, and there's so many to go over. Baba, I want to talk about General Electric and Tesla, and General Electric, believe it or not, is actually might be one of the best opportunities. Outside the name I gave you as my favorite name, of course. But I just want to talk about General Electric's last earnings because they were having issues with the SEC, etc. And they missed. They reported over here on October 30th, and you could see they gapped down a solid 60 cents and then just plummeted through the absolute floor. So with that being said, 14 cents missed the 20 cents last time they reported. They missed on revenues as well. And what they the reason why I'm bullish on it is because throughout after their earnings, they were doing a lot of things that were changing it for the better. I mean, they got, a new CFO. Again, and when you start getting rid of management in companies like this, I view that as extremely bullish. And I wouldn't be surprised to see GE gap up on earnings. And I think I'll just leave it um, easy from that. I mean, the CEO said it's fundamentally a strong company, and the results are far from their full potential. I mean, you have to sort of agree with that to some stretch of the imagination. I mean, here's a weekly of General Electric. I mean, at the end of 2016, this was a $32 company, and this has just been one of the largest heavy blue chip failures out there. I think General Electric is a solid company at these levels, and I think they're going to beat on earning. And I think I have to, because too many people are asking me about Tesla and my thoughts on Tesla earnings. And I usually started off with a laugh because I called for Elon Musk to relinquish his position and become just a controlling board member. I think that would be better. I love the idea, like all these super geniuses and nerds, and if you want to start talking Facebook, like thieves, and if you want to start talking Microsoft, like thieves, become CEOs of these companies, and they think that they could just run a $200 billion company. There's like There's no class or school that you could go to that will teach you how to run um, a company worth over 100 billion, let alone like $1 trillion if you want to go with Apple. But with that being said, a multi-billion dollar company like Tesla, um, let's go over what happened last time on earnings. I think that is a very important thing. So the last time they reported was on October 24th, which was right over here, and they basically gapped up about 30 points the next day and happened to rally ever since before pulling down. Because on paper it looked really good. They announced $2.90 profit versus the 19 cents loss expected, 6.82 billion in revenue versus 6.3 billion in revenue. And a lot of people, after they reported that, got super excited, got super excited um, with what happened on Tesla. What you didn't hear is just simple news like they were backing the target. I'm going to take you back to a time where Tesla was saying that they were backing their target of delivering 100,000 Model S's and X's this year. And that is, of course, before in the last um, the last week, since last Friday, after the prior Friday, like 2 Fridays ago, which is like 6 trading days ago, the company was falling because they were just unable to deliver. They started reducing their Model S and X production. They were laying off people. Now, I viewed these layoffs as positive. I did not view them cutting their production as positive in a full way, in a full manner, and I'll explain that. So basically, Tesla loses money on every car they build and sell. The more cars they build and sell, the more money they lose. The best way for them to not lose money would be to shut down the entire company. And then, of course, the stock price will fall because the company would be completely inactive. Um, so they're reducing their Model S and X production. And I find it kind of funny how this news came out right before this week of earnings. It's sort of a page. It's it's sort of a page out of Tim Cook's book where they actually came out and they were like, "Look, we're gonna suck. By the way, we're reporting in a couple weeks, but we're gonna suck." And that's what they sort of did. That actually, believe it or not, makes me bullish on Tesla. That makes me very, very bullish on Tesla. So, where what you probably didn't hear, which happened over the weekend, actually happened today is they actually doubled their service staff in Norway. So even though they were laying off people here in the US, I guess it happened on January 26th. I do apologize. So I guess it happened yesterday. And look, there's a Tesla refueling station. How cute is that? So they're actually like going into countries like Norway and they're doubling it there because these are the countries that are giving them subsidies to build their cars. The only way Tesla exists as a company is when a government hands you out money. Now, I'm not saying that negatively, quite the contrary. In fact, I'm actually saying it positively. Because if Tesla had no subsidies, they would be bankrupt a long time ago. So people they're given certain benefits and certain tax benefits by producing these electric cars in countries like Norway. What you're probably not reading here are just dumping money on Tesla to build these vehicles. So Tesla hired 360 employees in 2018, which is doubled the headcount. So what you're not seeing here, they actually have 13 service centers in Norway alone. Can you know where one service center is outside of California? I don't. So because the European Model 3 is viewed as a key event this year, um, it's kind of funny that Elon Musk called this a very difficult road ahead. That's why it was plummeting this week. but they're expecting to send their first Model 3 cars to Norway in February. And if you're increasing the amount of people you're hiring in Norway, it just might be that these little countries who pay, you know, taxpayer money, who want to dump that money on Tesla to build electric vehicles and go down the green path of greener energy, this is a blessing for the company. So I think you're going to see a lot of bullishness in Tesla. I know the company came out and said we have a very difficult road ahead. And as you guys know, I am on the record saying that that was me. I did call Elon Musk when he said last year that his company was going to be profitable. And I'm like, bull, you know what? Bull, you know what? Your company is the farthest thing from profitable in the world. Not until I see pigs flying, Elon. I don't see any pigs flying, Elon. Your company is not going to be profitable. So when he said he has a tough road ahead, I'm like, really, Sherlock? Thanks for informing us. With that being said, considering they're hiring people overseas, if Tesla is smart, they have a very positive thing to say on their earnings coming up. I am actually bullish on Tesla for their next earnings report as a result. I'm sure that surprises a lot of you, but I am actually bullish on GE, bullish on Tesla, bullish on Apple. Just for the record, no thoughts on Facebook and bearish on Amazon. So Amazon is the only one I'm really bearish in. And granted, if Amazon gaps down, it'll drag down a lot of things with it. And if Apple gaps up, it could pop up a lot of things with it. I get it. I understand how the market moves, but I just thought I would give you that sort of analysis. Tomorrow morning, you're walking into Caterpillar reporting. That's going to be like construction and that type of stuff. You have so many names reporting that I'm just going to have to go through it during the week, like Triple M, Harley Davidson, Verizon, Pfizer, AMD is reporting tomorrow, Tuesday, eBay, which I'm extremely bullish, extremely bullish on eBay. I was extremely bullish last time they gapped up. Remember, it worked. I'm still extremely bullish for this time coming up this week. We're going to look to maybe play that. So I'm very excited about that as well. Just too many names to go over. I'm extremely bullish in PayPal. I have no thoughts on AT&T. Boeing and McDonald's are reporting. I am shocked that McDonald's is able to hold up, on these levels. I mean, I'm sorry. Like me, I eat everything. Me, you know, I eat for two. Like my wife was telling me when she was pregnant, she's like, I'm eating for two. I'm always eating for two. And even though I might look pregnant, I am actually not, believe it or not. I'm always eating for two. McDonald's, I don't know how people eat this. I mean, I did it for years and I still can't believe how I did. I'm like, did I really do that? I do not know how people eat McDonald's. And why am I saying this? Because the all-time high was 190.88 and on Friday it hit 189.42. Most people don't realize that McDonald's was $1.45 off all-time highs on Friday. So during this deep market pull-in, McDonald's held its own. They better come out with earnings report of the century if they're going to hold up. And of course, we're going to analyze all that and more. How about our precise daily stock levels? Let's just share that with you now. Very, very simple. These are the levels of algorithmic support and resistance. I like to buy on support levels. I like to sell through resistance levels. These levels don't always hit. In fact, they usually do not hit. But when they do, they generally produce a statistically favorable outcome when I happen to trade them. You can go ahead and copy these levels now. Very important, as 3 of those names are reporting this week. Definitely something to look at. Game plan name. You guys want a game plan name? I have a game plan name. How about CGC? So again, on CGC, uh, obviously our favorite name from Friday. And if it's not obvious, if you're a Newsbeat Live member, you get basically simply this. CGCs, this was from last Friday, 6 on the 1 to 10 upgrade. My largest upgrade this year for me. Granted, it's January because largest upgrade this year. We're still in the first month, wink, wink. And I was also watching earnings names as well. But CGC was my highest conviction name from Friday. And again, if you came in Friday, and I have links in the videos, and you did a one and done, which basically means you buy through the first 1 minute break of the first 1 minute bar, so you bought it right here on the second minute, you crushed it. Maybe you did a high one strategy, easy opportunity to make a quick 30 cents. Maybe you did the high five strategy, which was the next strategy we use, and you buy through the 5 minute after it breaks down through the exponential 8. Could have hit a home run. Went from 46.50 to 48.71 on this 5 minute chart. No pain. You know, like how they say painless dentistry? This is painless trading. It's just a matter of where you took your profits during that magnificent $3.20 run, or whatever that was, $3.21 run. That's if you did the high five. Maybe, maybe you decided to do a fun 21 strategy where you wait for the 21 to hit for the first time. That's the next thing we generally look for. And you could see it hit the 21 for the first time right over here. And then you wait for the next 5 minute breakout. And it went from 48.15 all the way to $49 between 1 and 2 o'clock, where trading gets really slow and grindy. Again, painless moves. Following algorithmic strategies on the names we give you, the algorithmic strategies I share with you. If you want to see them, they're all within the links to the videos within the description of this video. Definitely check them out. They're free. And on my game plan, I'm looking for a break of $49 tomorrow in CGC. Um, Currently, I think the futures were down a little. Last I checked, let's take another look at them. They're down a little right now. Anything could change. They could be up in the morning. Nasdaq and Dow and S&P minis are just down right now, so you might be walking into a small gap down at the moment. Again, granted, anything can happen overnight here, but again, I am looking for a break of $49, which was Friday's high in CGC. So Forex, okay, so I've been trying something new in Forex here using the curl strategies. I know that's not the easiest thing in the world to read, but the top trade was a trade I had on from the week before. Here's a new trade that I have, and it's God, I know it's stretched out and all ugly. It really is bad looking. I guess here it is. It's a short, an Aussie New Zealand dollar right here. Short, two standard lots, Aussie New Zealand at this price with a stop loss there. And be nice if I showed you my take profit right there. Go back and pause this video if you'd like to read those levels. I know I stretched them out a little. A lot of earnings, a lot analysis. Again, this is going to be the most important week to set the tone for the year because all the major, well, not all, but a lot of the major companies, Facebook, Apple, Amazon, are indeed reporting. Biggest Chinese companies reporting, Alibaba this week as well. We didn't go into those earnings because there's just simply too much excitement on the list. There's a reason, ladies and gentlemen, why analysts who have no idea what they're talking about swear that the Newsbeat live room is the largest, fastest growing trading room in the nation. Happy trading, make money. I'll see you guys tomorrow on the Newsbeat live trading broadcast. Have a wonderful evening.